FM KCAA Loma Linda.
Welcome to the International Wealth Builders radio show. I am your host, Michelle Estelle, the homebuyer coach here on KCAA Broadcasting Network, channel 1050 AM and 106.5 FM. We are affiliated with CNBC, NBC News, and NBC Sports, where we reach 5 million households in the greater Los Angeles area. If you missed any of our previous shows, you can watch them on our TV streaming channel distribution on Roku TV, Amazon Fire TV, and the Android app. All you have to do is to subscribe to the Building Solid Foundations channel. Today, I have a great show planned for you. I'm going to review the most common questions I am asked in my profession as a homebuyer coach and a loan originator. We are going to discuss when is a good time to buy a home, if it's a good time to buy a home, something about the interest rates, and a little bit about house prices and where we think the market is going to go for 2023. So a little bit of background on me. I have been a homebuyer coach and mortgage professional for over half my life, more than half my life. I started in this industry in 1985. So I was 19, so you can do the math. I was in college, going to school to be an engineer and studying math and science. And I also was working a part-time job where on my route, I applied for some jobs. And most of the businesses that I delivered to in my part-time job were to real estate offices, escrow offices, mortgage companies, some attorney offices, and title offices. So I put in my application on my route and I got a job at a mortgage company. I continued to go to school to be an engineer, but soon I was heading to my physics lab in heels and a dress and without dinner. And I started to realize that maybe my career should be in the mortgage industry. So most people don't wake up or dream about being a mortgage loan originator, and that wasn't a dream of mine, but I fell into it, and nearly 40 years later, I am still in the mortgage industry. So today I'm going to give you my best advice regarding the questions that I'm often asked. This show is an advertisement as well as just for informational purposes, and it is not any type of a commitment to lend or with regard to programs and disclaimers for any particular mortgage company. This is just a show where I'm going to talk about what I know and what my experience have been being a homebuyer coach. So the first segment, we're going to go over, is it a good time to buy? And in our future segments in the next hour, we're going to discuss interest rates and prices of homes and where the market might be going for 2023. So the first segment, is it a good time to buy a home? Well, again, this is in my opinion. This is my experience over 40 years of being in this industry. And I can tell you without a doubt that nearly any time is a good time to buy a home if it is right for you. So it has nothing to do with the markets as much as it has to do with your preparation and your goals for homeownership. If you want to buy a home, any time would be a good time if you can afford it, if you are prepared for the monthly payment, if you have stable employment, if you have decent credit, and you have a shelter budget anyway, because you're going to rent, most likely rent or pay for a home, potentially live with family or friends or have roommates, sure. But when that time comes that you've prepared for a home, we're not going to be so much concerned about what the market's doing. We're going to be concerned about where we are in our own life. Now, the data behind this on the pro side is that if you look at a 10-year period, if somebody purchases a home and they're going to hold it for let's say 7 to 10 years. In that 7 to 10 years, you are going to have up and down. You're going to have ups and downs in the market. You're going to possibly lose some value, gain some value, lose some value, and gain some value. But at the end of that 7 to 10 years, you are going to have mostly all upside. Now, what you're also going to have is 10 years of payments on your mortgage loan, which means 10 years of amortization. So you will have reduced your balance that you owe on your purchase, and you will most likely have ended up in a point of appreciation as well as amortization, which means equity. If you rented for that same 10 years, you will not have anything to show for it. You won't have paid anybody's mortgage but the landlord. And that would be similar to 100% of interest and not gaining anything on that investment. So preparing for home ownership is an individual thing, and it is something that for most people should be a goal. I understand that in some cases, renting is also good for a very few amount of people, depending on what you plan to do in your life and if you know where you want to live. So a couple reasons why someone might rent is because they're not sure exactly where they want to live, or they like to move around a lot. They like to travel. They like to live in different places. I could see somebody not wanting to buy, and because what they're actually paying for is that freedom to move around. And to decide where they want to settle. So that little exception is something, again, very personal. But if you're going to buy and hold a home for 10 years, you are going to be on the upside. And if you hadn't been renting for that 10 years, that also is a huge plus for you. Now, what we see as far as affordability might be another concern, because yes, with higher interest rates, payments are higher. But one thing that's very unique and special about living in the United States is one of the only countries where you can obtain financing for a home that is fixed for 30 years. Most other countries have some type of balloon payment or variable option in their lending for housing, or they don't have that long of a term. It's either going to be a balloon or a shorter term, or it's not going to be fixed for a long period of time. So in the United States, we have a 30-year fixed. What that means is that you are locking in what you're paying for your shelter. Now, in another show, I'm going to go over more about taxes and insurance. But when I talk about your payment not changing, we're talking about the principal and interest payment, the portion of your payment that pays back the loan, the money that you borrowed. So the principal and interest on the money that you've borrowed. Your entire payment might also include your taxes and insurance. Your taxes and insurance might not be fixed, but your mortgage payment, your principal and interest payment to pay back the loan that you borrowed to purchase a home, that is going to be fixed for 30 years. That is not going to happen with rent in most cases. If you are fortunate enough to live in the same place for 7 to 10 years, you probably will see some increase to your rent. You would not see that increase to the principal and interest payment on your mortgage. So that's another key thing, is you pretty much do lock in your shelter budget, and you have 30 years to pay that mortgage. The other benefit is that the way that you buy it, so if you buy it with a higher payment than you would like right now, in the next 10 years, chances are we might see a change in the rates that will offer you an opportunity to benefit from a refinance. Now, you should never buy a home thinking I will refinance, because you don't know that you are going to have an option to refinance that's going to be beneficial to you. You always have an opportunity to refinance, but you want to do it when it's going to be a benefit, when your payment's going to go down. But think about this: you paid 10 years on your mortgage, so your balance is lower. And if the rates drop in 7 to 10 years or fewer, then you are refinancing a lower balance and potentially at a lower interest rate. So even though you have to pay some costs to do this, chances are you're going to have a potentially better monthly payment. So you want to be able to afford your payment when you buy. You want to be prepared for that. Don't think about anything else about the market, because think about when it is the best time, when it's quote unquote the best time to do something. who's going to do it? Literally everyone. So that changes the market. Supply and demand, economics 101. When everybody wants something that the seller has, then the seller can set the price. So you don't necessarily want to only look at the time of the market when it's considered to be the best time to buy, because quickly that could change to maybe not the best time to buy. So in summary, you want to buy a home when the time is right for you. And I always say, don't mention the word wait. You're not waiting to buy, you are preparing to buy. If you're not going to buy a home right now, everything that you do in your budget, in your finances, in your credit should be geared towards that preparation to buy a home when the time is right for you. Not the market, but for you. So in our next segment, we'll review this a little bit, and then we're going to go over what are the interest rates going to do? That is always the question. Are they going to go up? Are they going to go down? And the funny thing about it is no matter how low or how high the rates are, I always get asked that same question. So we're going to review that in the next segment. Thank you so much for joining this one, and we'll take a break and we'll be back soon.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
Real Men of Real Estate.
Men of Real Estate radio show here on KCAA.
Boats, mortgages can be purchased.
All of us want to live in thriving communities.
Basically go to the radio station kcaaradio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
Hi, this is Jim McLaughlin with Effective Action Consulting, and I've been a member of FireUp Connect for, probably 3 years now. And what I really like about FireUp Connect is the unique model that we go through, that we follow, the agenda, so to speak, in the meeting that really has us get engaged and involved with each other in the meetings. It's not that we're individuals, it's that we're all really working together to better ourselves, our businesses, and the community through the projects that we work on. So I'm really grateful to have the opportunity to network with people in this environment, and it's really impacted my business in a big way. So take a look.
Building Solid Foundations Radio.
Welcome back to the International Wealth Builders Radio Talk Show. I am your host, Michelle Estelle, the homebuyer coach on KCAA Broadcasting Network, 1050 AM and 106.5 FM. We are affiliated with CNBC, NBC News, NBC Sports, and we cover over 5 million households in the greater Los Angeles area. If you've missed any of our previous shows, you can watch us on TV streaming channel distribution, Roku TV, Amazon Fire TV, and Android app. All you have to do is subscribe to the Building Solid Foundations channel. So in the last segment, we discussed when is a good time to buy, or is it a good time to buy? And basically, my answer is it is only a good time to buy when it's right for you. No other market will dictate whether it is time to buy except for the preparation that you've done and if you are ready and prepared to buy a home. In this segment, we're going to go over the second question that I am often asked, and that is, what are interest rates going to do? And are interest rates going to go down? The funny thing is that no matter what the interest rates are, the question is always if rates are going to go down. Or the statement is that they're going to wait. A buyer, my clients, anyone in the market are going to wait for interest rates to go down. Now, that is always on a relative scale because I've been in the business long enough to have seen double-digit, extremely high interest rates. And I've seen some middle interest rates, 6.875, 7%, and I've seen 2.25. So we've seen a lot of interest rates, and when they were double digit in the 80s, let's say they're 11, 12%, 8% would have been a great interest rate. Even 9.99 would have been a great interest rate because it was relative to where the market is. When we had rates that were in the threes, people were waiting for them to go down. In this case, they did get into the twos. And even when we were in the twos, there were still people who thought maybe the interest rates will go down. So it's definitely a relative scale. Right now, I would say this is all in generalities. There is no one rate fits all borrower. Your rates are dependent on your credit score, your down payment or loan to value. How much is your loan in relationship to your value? What type of program, and even what type of property. So your credit score, your down payment or loan to value, the type of property, and the program that you are going to utilize to finance your home. All of those go into what your interest rate will be. So there is no one size fits all, but let's just say in general, we are in the solid sixes in most all products. 6% interest rate at this time. 40 years ago, like I mentioned, in the 80s, we had quite high interest rates, and what we also had was high inflation. And so we are in an inflationary market. The inflation is high, and now rates are high. The feds are increasing the Fed rate. The Fed rate is not the interest rate, is not mortgage interest rate. The Fed rate is the overnight rate that the banks are charged for borrowing money, or charge each other borrowing money. And obviously, if they're paying more for money, this is going to also affect other types of financing and interest rates. But there's many other things that also go into calculating what the mortgage interest rates will be. All different types of economic news will affect the market, which affects bonds, which affects a whole bunch of other things, and then interest rates are then also affected. So the key for this year is, will the feds be successful at reducing inflation with their plan of increasing the Fed rate? If they're successful, which many people believe they will be successful, and that belief is a really strong 75, 80, 85% chance that they would be successful in reducing inflation with their plan of increasing the Fed rate. If that happens, then we should see some calming down of the interest rates, and we should land somewhere in the fives. Maybe the fours, but my own prediction is let's just be in the fives. So the other thing that could happen, the 10, 20, 15% chance, is that the feds are not successful at reducing interest rates anytime soon. Reducing inflation anytime soon. And so their plan would be to continue to increase the Fed rate. If they do that, we may see rates in the 8 or the 9%. So at this point, it could go either way, but there's a strong indication that they will be successful at helping to curb inflation and to reduce inflation. And then we will see, we might be in a recession, a small recession, and we go from inflation into recession. And then we'll see some stimulating the market, and we'll see rates kind of calm down, maybe in the mid fives, maybe in the fives. But one more time, I want to say this, there is a chance that it won't work, and we could see rates that are in the 8 or 9%. We even have some products right now that do have rates that are double digit. And those would be for a very special type of program. And those rates could also go higher. But Right now, that is what affects the affordability. So in my previous segment, I was saying that any market is a good market to buy in if you're prepared and if you can afford it and you find the house that you want, you should buy. Because the way that you finance it now may not be the way that you finance it over the long term. And you still could be in a great position holding that home for 7 to 10 years. So with interest rates, of course, the one challenging thing is that with the current price of homes and a higher interest rate compared to when the rates were lower, your mortgage payment now could be $1,000, $1,200, $1,500 more than it was at a rate of 3 or 4%, of course. So if you have a rate of 7 or 6 and you used to have a rate of 3 or 4, that same home will cost you about $1,000 or maybe $1,500 more on a monthly basis. So that could affect your affordability. And that would be the only thing that could make it more difficult for you to buy, even if you're ready in this market, finding the property that you like and being able to afford it. Now, that may mean that you need to move to a place that's more affordable. And anywhere that you could buy that is affordable, the same things will occur even with the interest rates high, is that you over time will have amortization and appreciation. So again, if you buy that home for a long term, it's still going to be worth buying. It also does something very particular as far as taxes go. When you are paying more interest, you can meet that threshold of an itemized deduction, and that itemized deduction now helps you to reduce your tax exposure, and then you actually get more money on a monthly basis. You're able to keep more of your income and not pay it to taxes when you can do an itemized deduction. So if there's any silver lining or positive to having higher interest rates, it is in your taxes and that tax benefit that it gives you by being able to show more interest paid and potentially, because I'm not a tax preparer, to potentially do an itemized deduction instead of the standard deduction, which helps reduce your taxable income, which helps reduce or mitigate your tax exposure or the taxes that you have to pay. So that means more money in your pocket, and that is a tax benefit. So we always have to look at the silver linings, and these are definitely silver linings. And the main thing that I would say about interest rates is definitely everybody looks at it on a relative scale. Gas was costing us $7, now it's maybe $4.70, and we think that's great because it went down. But it's really not great because we had gas that was under $3. So, it's all going to be relative, and don't try to play the market. Just prepare for home ownership, and if it's right for you, you're going to have to go with what the rates are and the housing prices are, and if you could afford it, get in. One of my friends said, don't wait to get into real estate, get into real estate and wait, and I agree 100%. If you are buying shelter for the long term, at least 10 years, you're going to do just great. Now, obviously having stable income, stable employment, and having a great budget and paying attention to the things that are important, that's really going to help out. So in the next segment, I am going to cover a little bit of this section one more time when we talk about credit and affordability. And then we are going to talk about where we think home prices are going to go, because the third thing that you all are always saying is, I'm waiting for house prices to go down. Well, we're going to talk about that in the next segment. Thank you so much for joining me on this segment. And remember, if you've missed any of our previous shows, you can go ahead and look at some of the recorded viewings of our previous shows on our TV streaming channel distribution on Roku TV, Amazon Fire, and the Android app. All you have to do is to subscribe to the Building Solid Foundations channel, and you can see some of our other amazing shows. So I look forward to seeing you after this break, and drive safe until we come back, and we will talk to you soon.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections. Hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
Real men of real estate.
Men of Real Estate Radio show here on KCAA.
Boats, mortgages can be purchased.
All of us want to live in thriving communities.
Basically, go to the radio station kcaaradio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
Hi, this is Jim McLaughlin with Effective Action Consulting, and I've been a member of FireUp Connect for, probably 3 years now. And what I really like about FireUp Connect is the unique model that we go through, that we follow, the agenda, so to speak, in the meeting that really has us get engaged and involved with each other in the meetings. It's not that we're individuals, it's that we're all really working together to better ourselves, our businesses, and the community through the projects that we work on. So I'm really grateful to have the opportunity to network with people in this environment, and it's really impacted my business in a big way. So take a look.
This is Steve Matley. Join me every Thursday at 3 p.m. right here on KCAA for Building Solid Foundations Radio Talk Show. I spent decades as a professional construction manager, business owner, real estate developer, and a college educator, and I enjoy learning new things from other people. We talk a lot about real estate, business, and finance, but we cover a diverse range of other topics as well. Some of the topics we've discussed in the past few months include real estate investing, leadership, higher education, ADUs, marketing using technology, multifamily rental properties, business strategy, entrepreneurship. You never know who may show up or what they may talk about, so join us right here on KCAA for Building Solid Foundations Radio.
Welcome back to the International Wealth Builders Radio Talk Show. I am your host, Michelle Estelle, the home buyer coach on KCAA Broadcasting Network, 1050 AM and 106.5 FM. We are affiliated with CNBC, NBC News, and NBC Sports, where we cover 5 million households in the greater Los Angeles area. If you missed any of our previous shows, you can watch on our TV streaming channel distribution on Roku TV, Amazon Fire TV, and Android app. All you have to do is subscribe to the Building Solid Foundations channel. I'm so glad that you're back for this third segment on the most common questions that I get asked in my profession as a home buyer coach and a mortgage professional. And in this segment, we are going to talk about home prices. What is going to happen to home prices? The most common thing that I hear from any of my clients or when I'm just out and about is I'm waiting for house prices to go down. House prices are still too high. When are they going to go down? Well, the thing is that this is also a very relative thing because people need to be selling their houses, and then they need to have a need to sell their house, and they have to have buyers who want to buy it. And when they have few buyers who want to buy it and they really have a need, that might be a reason for them to reduce the price to sell. But what I'm more interested in is the fact that people have homes that have a lot of equity. They have potentially refied in the last couple years to have a low interest rate. So they have a low housing payment and low shelter payment at this time. And if they sell, where are they going to go to better their situation? That is the question, because if they sell now high, they will have the equity and they could put a down payment. But even on their next purchase with a large down payment, their mortgage payment could be more. So are they bettering themselves? Even if you move out of state right now, prices are pretty high all around. And the main reason is economics 101, supply and demand. We have a housing shortage in the nation. I've heard that it's estimated to be a shortage of about 4 million homes in relationship to buyers. And anytime that you have a supply and demand issue, you are going to have an increased price. If people want something that is scarce, they're going to be willing to pay more. And if sellers know that they have something that is desirable, they can charge more. Now, we know that right now, maybe the affordability makes it that there's less people that are going to want to buy, but there also then will be less people that want to sell. Because what I said before, where are they going to go to be in a better position? So then that makes it where the people who need to sell are going to have to bargain with the current market. They are going to have to reduce the price that is going to work for the buyers in the market. And therefore, you might see some prices coming down. But what I've also noticed is if I look up home price on Zillow and I see that the value was different than it might have been a handful of months ago, what I'm actually seeing, I think, is that we continue to see Zillow or Redfin or Realtor.com projecting what you could get for your house based on the activity that's happening in the market. So if your neighbor just sold their home, for 700,000, 800,000, and then they would make your house worth 850,000 because the last person that sold was 650, the next person that sold 758. So they gave you a projected like trajectory of what your home price might be if you sold it, but it still depends on what somebody's willing to pay. So when you look at the shift in the market with the higher interest rates, we didn't necessarily have less of a demand. We just had a cooling off for that demand. We still have less homes than are needed, but rather than having 30 buyers for every home, maybe we have 5 buyers for every home. That's still not enough to make it where the prices need to significantly drop in order for people to sell if they want to sell. So that's one thing, is that I don't see that home prices are going to take a deep dive. We have none of the circumstances that we had in 2008 for a market crash. So when people say that, or they're thinking everybody's going to go into foreclosure, we don't have any of those indicators. We have quite the opposite type of market that we had in 2008. First of all, we had really poor financing. Some people who really were in a hardship to be able to pay the financing that they got to purchase their home. And for a while, these types of the borrowers and the types of loans that they had, they could keep refinancing. They had a bailout mechanism. Equity was increasing, prices were increasing quite rapidly, and they could just keep refinancing. They could even take cash out. They could sell at a profit and buy something else. They could buy multiple homes. Before that meltdown, there was lots of ways that people could continue, even if they couldn't make their payment, to hold on to that home. But at some point, when that financing went away, that type of financing went away, there was no more bailout mechanism for that borrower to continue to change their financing in order to hold on to their house. So they had to lose their home. And this was a huge impact across everything, every market, every type of job, where people were then, not that they couldn't afford their home at one point, but the loss of employment made them at risk to lose their home. And this is where we had prices just completely drop. Now, some people were able to sell their home and buy another home at a lower price and a decent interest rate. So they still were able to maintain home ownership, but they eventually lost a property or more than one property. Some people lost several properties. I would venture to say that some of the people who maybe didn't have to sell but did may look back and think that their home that they sold for maybe 400,000 might be worth $1 million today. So again, in that 10 years or more, people who were able to hold on to their home during that market are definitely on the upside right now. Even if they refinance, a couple times, they still potentially have a good position with a low interest rate and equity. So there's proof even in the worst market that 10 years or 15 years later that people had a huge advantage. Now, most of that advantage was very recent. They didn't just get all the equity in the 15 years. They got most of the equity in the last 3 years, but they still were on the upside after the 10-year mark, I would say, or at least getting there, depending on the city, state, county that they lived, because every market geographically can be different as well. But we don't have that situation. So if you have a lot of equity and a low interest rate and a low mortgage payment, you are going to do everything you can to hold on to that home. And so the only concern that I have is employment. And if people have viable income and stable employment, and they have a low interest rate and equity, they're not giving up their home, even if it loses some of that value. Even if somebody's home is on the upside 800,000 and it goes to 500,000, which is 300,000 lost in equity, they still are in a great position. So my friends who are on the sidelines saying that they're waiting for the opportunity for a crash might be waiting for a really long time, because I myself, my personal opinion, I don't see any indicators that would make this that situation. Now, when millions of people own homes and everybody has a different situation, and maybe there's illness or employment situations or divorce or life-changing things that occur, homes can be at risk. So there's always going to be something there. But if that happens in a market where they still can get a high price, there's no reason for that home to be thrown away at a low price. It's still going to be, they're going to want to make a profit, and they still potentially can. So they're not going to sell their home for less if they don't have to. And the biggest indication that I see is most people who don't have to sell their home won't. So that's not going to give all of the rest of the people waiting on the sidelines to take advantage of that opportunity. There might not be that many opportunities. Now, again, my opinion, but I do not see this huge cycle. I could be wrong. And I think employment is going to be the biggest key, because even if rates are high and affordability is low, there's enough people who have a low housing payment right now, and they will keep their home, because to lose it means that they have potentially a higher shelter budget outside. Rent is hard and rent is high. Finding rentals is difficult right now. So the people who have a home are going to keep it. And like I said in my first segment, that still is a great reason to buy, because once you have that home, you could be like any of these other homeowners who maybe bought at a high interest rate, took advantage 10, 15 years later of a low interest rate, and have a great housing payment and have equity in their home. And that would be the key. That's a long-term investment in real estate, most likely where you will end up if you held onto your home for a while. So again, thank you for joining us in this segment. And in the next segment, we are going to kind of wrap this up a little bit with some of the other questions that I get asked, or final thoughts about what's going to happen in the market, and what we're going to do in our next show. So we are going to review that. And I just wanted to remind you that if you missed any of our previous shows, you can watch us on our TV streaming channel distribution on Roku TV, Amazon Fire, the Android app. And all you have to do is just subscribe to the Building Solid Foundations channel, and you can catch any of our previous shows. So up next, we're going to summarize this show today, going over house prices, interest rate, and when is a good time to buy. And I hope you come back for our final segment.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections. Hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
Real men of real estate.
Men of Real Estate Radio show here on KCAA.
Boats, mortgages can be purchased.
All of us want to live in thriving communities.
Basically, go to the radio station kcaaradio.com.
You can find us on your dial at 102.3 FM, 1050 AM, as well as 106.5 FM.
Hi, this is Jim McLaughlin with Effective Action Consulting, and I've been a member of FireUp Connect for, probably 3 years now. And what I really like about FireUp Connect is the unique model that we go through, that we follow, the agenda, so to speak, in the meeting that really has us get engaged and involved with each other in the meetings. It's not that we're individuals, it's that we're all really working together to better ourselves, our businesses, and the community through the projects that we work on. So I'm really grateful to have the opportunity to network with people in this environment, and it's really impacted my business in a big way. So take a look.
Solid Foundations Radio.
Welcome back to the International Wealth Builders Talk Radio Show, and I am your host, Michelle Estelle, the homebuyer coach, here on KCAA Broadcasting Network, 1050 AM and 106.5 FM. We are affiliated with CNBC, NBC News, NBC Sports, and we cover over 5 million households in the greater Los Angeles area. If you have missed any of our previous shows, you can watch us on our TV streaming channel distribution on Roku TV, Amazon Fire TV, and the Android app. All you have to do is subscribe to the Building Solid Foundations channel to see those previous shows. Now, some of you may have additional questions on my previous segments on the questions that I'm most asked in my mortgage profession. And you can always reach out to me by cell phone at my phone number 909-229-1730. This show is for advertisement and informational and educational purposes only. There is no commitment to lend, and you do have to get qualified to buy a home and get pre-qualified and meet all of the guidelines for the particular financing. What I am doing today is giving you an insight, answering questions, and educating you on the home buying process as your home buying coach. And this is from my nearly 40 years in the mortgage industry, helping families to achieve home ownership and answering questions on a daily basis about the market, about what programs are available, about how to finance a home. So in this final segment, I'm going to wrap up what we talked about in the previous segments. First question I'm always asked is it a good time to buy a home? And I say the best time and only time to buy a home is when you are ready, when you can afford it, when you find the house that meets your needs, when you are prepared with your budget and have stable income. It is not the market that dictates when is a good time to buy a home. It's your preparation. So the other thing I always say is don't say, wait, I'm waiting for something to happen, something out of your control, something on the outside you're waiting for in order to jump in on homeownership. You shouldn't be waiting. You should be preparing. You should be analyzing what's right for you. You need to know if it's time for you to rent right now because you're not sure where you want to live. You like to move around every couple years. You want to see the world or see the United States. And maybe you just don't want to buy yet. That's a good reason. There are good reasons to rent, but there's tons of reasons why to buy a home, even if you didn't want to move, because you could buy that home, live in it for a couple years, and then you could move. And you could rent somewhere else, and you can rent your property out. You could visit other places and then come back to your property. So if you intend to keep a property for 7 to 10 years, the market is not what's going to dictate that. It's your preparation. And when you're ready, you should buy a home. Second, we went over interest rates. Interest rates have a relative scale. Anytime the interest rate is set at one point, there is a wish or a consideration for it to be lower. If it's at 10, you want 9.99. If it's at 4, you want 3. If it's at 3, you want 2. People who had the opportunity to do something in a market of 2% interest rate still wanted to know if it was going to go down. Some people. So it is relative. And yes, interest rates are on the higher end right now, but they're actually closer to the national average or the long-term average of interest rates than that 2 or 3% was. So rates in the 6s and 7s are very common over time. But the last time we saw the the quick increase in interest rates was about 40 years ago. It was the same time that we had high inflation and we had a rapid increase of interest rates. And that's what we're seeing right now, is a reaction to inflation and to the current economic market. But we still have relatively low interest rates on the overall, or at least more in line with the long-term history of where mortgage interest rates have been. Another thing that I talked about is how fortunate we are in the United States that we have a 30-year fixed rate mortgage, because in other countries, they don't offer this long-term lock-in of an interest rate or a payment. You either have a variable component, or you have a shorter term, or you have a balloon payment. So we have an opportunity to have the same principal and interest payment to pay back our debt for the entire 30 years. Now, again, in another show, we're going to talk more about taxes and insurance. Taxes and insurance are on that home, even if you don't have a loan. You own your home free and clear, you're still paying taxes, and you're still having some type of insurance coverage. So even though if you have an impound account, those costs are part of your payment, they are not part of the payment that pays back the debt. So your debt payment for your loan is going to stay the same for as long as you have that loan and through 30 years. That is a huge advantage, because you'll know what your housing payment is going to be. And even with the increase in tax and fluctuation with property taxes and insurance, you're going to have a relative knowledge of what your housing budget is when you own a home. And that's a big plus. And we did talk about house prices. And my personal opinion is, we'll see the market cool down, and we have, but I don't see this big crash in prices. We have none of the same situations or components of what caused us to have a housing bubble crash in 2008. We just don't have it. We don't have the same circumstances. We have people with equity in their homes and very low fixed rate mortgages, very low mortgage payments. People who don't have to sell maybe aren't going to sell, and we have a shortage of homes. When we have a shortage of homes, we have a demand. We have a high demand and low inventory, then prices will remain stable. We may not be seeing that projection of your house going up. One neighbor sells for $600,000, the next neighbor sells for $630,000, the next neighbor sells for $670,000, and rapidly those values go up. We are not seeing that, but we're certainly seeing more of a stable balance of home prices, and they're still high because there's not a lot of homes. And again, this will be from market to market. If you're ready to buy and you can't afford in a certain neighborhood, you may need to look out. You may need to look at another state. You may need to look at another county or community. Fortunately, some companies are still doing telecommuting, so you may be able to live in an area and not have to drive to work. That might present the perfect opportunity for you to pick up real estate and live in it and fix your shelter budget and be able to have equity and amortization and be in a great position in the long run. So I hope that all of this really helps you and gets you motivated to get prepared and pre-qualified, know your numbers, know your budget, and get you ready to buy. The other preparation thing that I really want to mention is that keeping debt low is important. And one of the things that we see a huge trend is people buying expensive cars and having very large car payments. I would advise you to not do that. So I thank you so much for joining us today, and I look forward to our next show next month. And if you have any questions regarding mortgage, please give me a call at 909-229-1730. I would love to answer any of your questions, and thank you for joining us.
Psst. Hey, you. Yeah, you. Do you know